Well, hello and welcome to Morning Trade with Moneycontrol. I'm Nandita Khemka and I'm here to help you navigate the trading day with actionable trading strategies, sectoral trends to watch out for, and of course, your queries that you send in during the course of the show. If you have any queries, do send them in to us with the hashtag AskMC and we will have them answered by our expert. But before we do that, let's take a look at what the global handover is looking like this morning. Well, Wall Street ends higher for the third straight day ahead of midterm elections and the crucial inflation print for October. Asia opens mixed and the SGX Nifty hints at a start above 18,400 for the Indian markets. European markets edge higher amid caution ahead of the high-stakes midterm elections in America. Tech stocks climbed over 3%, leading other sectors higher. However, oil and gas was the sole outlier as crude prices have slipped. And stocks in the spotlight today are Tata Motors, BPCL and Paytm, and have FIIs. FIIs have turned buyers in the Indian markets over the last few weeks. Will the trend sustain? We discuss that and a lot more on the show. Well, we're now joined in by Dipan Mehtas of Elixir Equities to discuss the market setup, the sectors to watch out for, and the outlook on FII flows going forward. Well, good morning, Dipan. Good to have you on the show. Well, talk about the Indian markets. It's been all-round a cheer because the Nifty is just about 200 points away from its all-time high. Given the fact that the earnings have also not thrown in any negative surprises, what is your own outlook for the Nifty and the markets going forward?
Good morning, Nandita, and thanks for having me on your show. A real pleasure. I think we are seeing a risk on trade globally, and that is certainly benefiting Indian equities. I think all the crises and the challenges in the global markets, geopolitical issues as well, I think gradually those have been discounted, and now markets and investors are seeing beyond all these current problems which we had, that being Ukraine war and inflationary trends. I think those are more or less been factored in. And in India, I think we're having a pretty decent earnings season underway. It's led by good consumption growth rates. Capex cycle also has picked up. And on the whole, I think government policies, government spending also is holding up pretty well. And many laggard industries like auto, banking, to an extent, and even capital goods are showing excellent growth. So I think that's enthusing a lot of investors to put money to work. And most importantly, I think we have seen at least a cessation of the relentless selling which the FIIs had been doing over the past several months or so. So a confluence of many positive factors lead us to believe that, who knows, maybe as early as next month or next year itself, we could have the markets trading at a new all-time high.
Right. You spoke about the FIIs turning buyers once again. Well, they have pumped in somewhere around 9,000 crores since the start of this month. But given the fact that the Fed has indicated that the Fed funds rate will settle in higher than expected, do you expect this trend to continue going forward for the next 3 to 4 months at least?
See, I think whatever is happening in the US economy as far as the inflation interest rates are concerned, I think that's more or less over and done with. The real risk factor in the market, global market, is a meltdown of a major financial institution, or for that matter, a sovereign crisis. And then, of course, there is the oil prices, which is really a wild card. At $100, we are fine. $110, we are fine. But if it spikes to $130, $140, then certainly negative sentiment will start to creep into our markets. So these are the three things which kind of risk factors one needs to look out for. Any major financial institution failure, sovereign crisis, or oil prices spiking up. And if either of these three events do not occur, then I think the worst is over. And all the negative issues which are there in the US market, those are gradually getting addressed. And at some point of time, I think this particular monetary tightening policy globally will end. And if you try to look beyond that, then I think India is in a very good position to capitalize on a risk-on trade, to capitalize on its internal domestic markets and domestic economy doing pretty well, as well as to benefit from an upcycle, I would say a cyclical upcycle in many sectors.
Cyclical upcycle in many sectors, but given the fact that the earnings season hasn't really thrown up any big disappointments, stocks are getting expensive with Nifty nearing its all-time high. Which are the pockets that one should look at this juncture?
See, I think stocks getting expensive is more of an opinion. And if you consider a longer term window, then valuations are still decent. if you take a 3 or 4 year kind of an outlook for earnings and what the profits of companies could be, maybe 1,000 days down the line, then stocks are not that expensive because you have to factor in that earnings growth for the next few quarters and years will be really strong and could surprise on the upside. Having said that, I think some of the sectors which have reported excellent earnings where investors should focus on and be overweight on is, of course, the banks. Then there is the auto ancillary, and we have the capital goods, the capex, engineering, construction companies. And then there are nice, decent consumption-oriented groups which are doing very well, like real estate, I think has done exceptionally well. And to an extent, travel, tourism also, hotel companies per se, they also have reported very good set of earnings. And there have been minor disappointments as far as consumer durables are concerned, but underlying growth momentum is pretty decent. The sectors to avoid, of course, are materials, cement, aluminium, steel. All of those have given very disappointing numbers. And with overall prices cooling off over there, I don't think that those are the sectors which could provide an outperformance in an investor's portfolio.
Right, I want to get in your view on these some of these new age companies. Nykaa has reported a strong set of numbers. Even Paytm, if you look at it on a quarter-on-quarter basis, it's not been that bad because losses have narrowed. After the kind of grubbing that these companies have seen, do you think the valuations have turned decent now and that there could be a possibility of looking at these stocks?
See, these new age digital companies or platform companies really are an enigma because there is no doubt that they are outstanding businesses. The way they have scaled up in the last 3 to 5 years or so clearly shows that there is a decent business model, good amount of top line momentum, and extremely aggressive managements. I think all of which we look for in a good investment opportunity. The real problem is the valuation, and one doesn't really know how to value these companies on a medium to longer term basis. And the way to work around it is to have a longer term horizon, like 3, 5, 7 years or so. There is no doubt in my mind that the larger companies of the decade beginning 2030 will be amongst these platform companies. Could be Paytm, could be Nykaa, could be any of the other companies in the present or future avatar. So we don't know that. It's just that these are great businesses. They are scaling up pretty well. They have a fabulous opportunity in the Indian domestic market, and they are being led by very aggressive managements, which will do anything to scale up the business model. It's just that valuations are a bit of a problem. So my advice to investors would be to invest a little bit of that portion, a small part of that portfolio, 5, 10, 15%, in a basket of these new age digital companies and see how they scale up. For the record, I think Nykaa came with a very good set of numbers, as did PB FinTech, and even Zomato we're looking forward to. And what is most heartening is that all of these new digital companies are focusing on curtailing their losses and starting to report profits, which means they are following business strategies which lead them to road of profitability far quicker when they earlier were listed. So I think I'm quite hopeful, and investors will start to see many merits in these companies as and when more and more quarters roll on.
I'll keep a small exposure to these stocks. That is the view from Dipan. But lastly, Dipan, I want to get in your view on the primary markets as well. Lots of these IPOs are hitting the street. In fact, we saw quite a few issues open over the last 2 weeks and a few more to come as we proceed this year. Would you advise any of these retail investors to take exposure to these IPOs, or is it still the time to stay away from these?
See, the IPOs become more of a lottery just now, especially from a retail investor's perspective, the way the oversubscriptions take place. And of course, I think retail investors should apply for all or most of these IPOs. And if they do get an allotment, then immediately you are seeing a nice bounce on listing. And that certainly, I think, is a good strategy to play on. But more than that, I think it's the kind of company getting listed are very interesting. They are providing greater diversity to our markets. They are providing specific investment themes which earlier we could not invest in. And many interesting companies are getting listed. And that I think maybe a year, 2 years down the line may provide excellent investment opportunities once we have seen how their earnings are progressing post-listing. And there's some amount of history as far as their trading is concerned. And we understand the businesses and the managements better. So in a way, what we are seeing in the primary market is going to be incrementally very, very positive for secondary market investors 6 to 12 months down the line. And that's something we are looking forward to. In the interim, my advice would be for retail investors to take a chance in these IPOs. And if you get an allotment, then immediately you are sitting on very decent profits. And if it's a good company, you could even look at averaging and making that a significant portion of your portfolio.
Well, watch out for these IPOs. That's a call from Dipan. With that, thanks a lot for taking out time and joining us this morning. Dipan, it was great chatting with you. Let's move on then and get and shift focus to the technical side of the market. And we are joined in by Rajesh Palvia of Axis Securities. Good morning, Rajesh. Good to have you on the show this morning. Well, Q's pretty strong from SGX Nifty. Looks like we will be reclaiming that 18,400 mark. What are the levels that you're watching out for today as well as for the next few days?
Very good morning. So very strong setup for Nifty as well as for the Bank Nifty, and both the indices are now almost near to all-time high. Looking at the strong global cues, we feel that we are going to have a gap up opening and almost around 18,350. We are expecting that market is likely to open, but we feel that this momentum is likely to continue, and in the continuation of this uptrend, Nifty is likely to make a new all-time high also in this series also, because if we look at the derivative data also, a lot of aggressive put writing has been witnessed in last couple of trading session towards 17,900, 18,000, 18,100. So this clearly indicates that base is shifting higher. And looking at the mid cap, small cap participation, which also suggests us that participation is on the broad based market, and the confidence is very high towards the bullish side in the market, and we feel that this momentum is likely to continue further higher. And our target for Nifty is at around 18,450, 18,500 in very short period of time. One can keep now stop loss for Nifty at around 18,100. For Bank Nifty, we are also bullish as we are already trading above 41,700 level. So almost we feel that if it continues to hold above 41,700, then next target for Bank Nifty is at around 42,500 to 43,000 in the continuation of this uptrend itself. One can now keep stop loss at around 41,200 for Bank Nifty also.
Right, let's now shift focus to the stocks that will be in the spotlight in today's session. Coal India, that's the first one on my list. Profits have jumped 100% literally in the second quarter compared to last year. Revenues have also been pretty strong. It's a healthy top line and higher other income that have aided the numbers. If you look at the stocks, from 180 levels, it's come up to somewhere around 250 levels. And in the last 6 months, it's gained somewhere around 35% or thereabouts. Upside to continue going forward, Rajesh?
A very strong recovery we have seen in the stock in last couple of months, and now very sustained buying is witnessed in the Coal India, especially in last 3-4 months. Looking at the setup on the daily chart, we are seeing that series of higher top, higher bottom formation is taking place, which is clearly suggesting that trend is sustained and strength is there in the stock. So our recommendation is to remain invested in the stock, and we are expecting further more upside in the continuation of this trend towards 275, 280 would be the possible target in the near term to short term. One can remain on the buying side. Keep a stop loss of 235 to hold your positions.
Right, one can remain on the buying side when it comes to Coal India. Moving on, CED. Profits have tanked over 85% on a year-on-year basis. It's the higher input costs that have hurt the second quarter earnings. From Friday, it has seen quite a good run from levels of somewhere around 1590 or so. It has come up to somewhere around 1614. But given the fact that the earnings have been underwhelming, do you expect it to come under a bout of profit booking now?
See, in the previous session, we have witnessed, strong buying action in the tire space, and C8 is one of the stock. And now, looking at the price action, we feel that now stock is approaching towards its multiple supply zone, which is at around 1680, 1690 zone. But looking at the near term as well as short term setup, we feel that sooner or later stock is poised for giving breakout of this multiple supply zone in this up move. So once stock crosses above 1700 level, then possibly the next target for C8 would be at around 1780, even 1820 on the higher side. Looking at the near-term setup, we advise to hold on the stock as the strength is there on the near-term setup also. Stock is holding above all its important moving averages. So we feel that that stock will try to attempt to give breakout of its multiple supply zone on the 1690 zone. Keep stop loss at the current juncture at around 1570 to hold your position.
Right, let's move on to BPCL. It swung to a loss in this quarter of 300 odd crores versus profit of 2,800 crores in the same quarter last year. Now, for OMCs, the margins have come under pressure in the wake of rising crude prices. Do you expect this chart to come under pressure now? Because since the start of the year, it has been under a fair bit of pressure anyway.
Yeah, so looking at the all OMC companies, still all companies are in the bearish zone. Looking at the recovery which we have seen in the recent past, it's still not it's not a substantial recovery. Still, stocks are trading below their important moving averages. So we feel that this pullback is an exit opportunity in the OMC stock, especially if we talk about BPCL. We feel that if stock comes near to 315 320 zone is again one can book profits or exit from the stock, because stock trend is still weak, and we feel that again selling pressure, supply pressure is likely to continue further on the higher side, and stock may again come down to the level of 290 even 280 zone. So overall trend is weak, so exit would be our recommendation if any up move comes in the near term also towards 315 320.
Exit is the call from Rajesh on BPCL. Moving on to Paytm, I want to get in your view on this one, because on a YOY basis, Q2 losses have widened, but on a quarter-on-quarter basis, it has managed to narrow down some of its losses. And of course, from the start of the year, we've seen the stock shave off somewhere around 50%. Going forward, do you expect some buying to come into the counter, given the fact that the earnings weren't as bad on a Q-on-Q basis?
So stock has corrected significantly in last couple of months, but since last 3-4 months we are seeing that stock is trading in very narrow range, and stock is consolidating around 750 to 650 zone. But looking at the immediate near-term setup, we feel that still stock is going to witness further more supply pressure if any pullback comes in the near term also. Until stock not crosses above 800 level on a weekly closing basis, our advice would be those who are already bought at the lower level, one can book profits around 750 800 zone, which is very steep resistance for the stock on the monthly chart. So unless stock not able to manage above 800 level, there would be again any pullback would be an exit opportunity in the stock, because trend is weak still. And on the breakdown of 620, again, stock will continue its downtrend. So our advice would be try to book profits in any pullback comes towards 700, 740 zone.
Right. Try to book profits on any pullback. Let's now shift focus to some of the queries that we've been getting in this morning. The first one comes in from Naveen, and he wants to know your views on Tata Power and Tata Motors. Remember, Tata Motors is going to come out with its numbers today. So how are these two counters looking on the charts, Rajesh?
So first we discussed Tata Power. Stock is consolidating in a range. Though overall structure is positive for Tata Power, stock has already taken support from its previous breakout, which we have witnessed around 205 level on the monthly chart. So looking at the overall scenario for Tata Power, we feel that stock may continue its recovery phase. Once stock crosses about 240, then we can see furthermore upside in a very short period of time. About 240, we can say like stock can move further higher towards 270 285 zone. But till the stock not crosses those level, we may see some more consolidation action in the stock. Any dip towards 210 is an opportunity to buy the stock, as overall setup for the stock is positive, and we feel that upward momentum may continue in the stock about 240 zone. For Tata Motor, it's a fourth consecutive week where we are seeing that stock is making higher high formation, which is clearly a bullish sign on the near term as well as on the short term setup. In this up move, stock now trading about 20-day, 50-day moving average, which is also adding up the bullishness. So looking at the setup, we advise to hold your long position as near-term charts are positive. Keep stop loss of 420 to hold your long position. If Tata Motor manages to cross about 445, then possibly stock can rally further higher towards 480 zone also. So 440 is the immediate hurdle which we are seeing on the near-term chart. But looking at the near-term setup, we advise to hold with the stop loss of 420.
Hold on to Tata Motors. That's a call from Rajesh. Well, the next one is coming in on Vedanta Fashion, and Uday Singh wants to know your views on this stock. Now, looking at the 5-day chart, it has been under a fair bit of pressure. Do you expect this pressure to continue, or do you expect it to stage a turnaround going forward?
So looking at the setup for Vedanta Fashion, still if we look at the overall setup, the stock is witnessing supply pressure, and we feel that furthermore consolidation we can see in the near term also. So our advice would be to buy and accumulate in the decline towards 1360, 1350, which is a very important support area for the stock on the near term basis. So we suggest overall setup for the stock is bullish, but looking at the near-term setup, we feel some more consolidation is likely to continue. 1340, 1350 is very important support area, and if it stocks continues to hold that level, then possibly stock may try to give breakout above 1470, which is a multiple resistance zone since last 5-6 weeks. Once the stock crosses above 1470 zone, then possibly stock will continue its upward momentum, and 1600 would be the target on the positional basis. So it's a buy and accumulate would be our strategy at this moment for the Vedanta Fashion.
Right, let's move on to the next one. This one is coming in from Vijaya, and she wants to know your view on Adani Wilmar. Well, stock is up over 150% if you look at it on a YTD basis. Looking at the kind of run that we have seen on Adani group of stocks, do you expect this to continue, or do you expect the stocks to come under a fair bit of profit booking going forward?
So most of the Adani Group stocks are in limelight since last couple of months, and still Adani Wilmar is displaying some consolidation action. But still overall setup for Adani Wilmar is also positive. We feel that some more consolidation is likely to continue for some more time. But once stock manages to cross above 740, 750 zone, then it will resume its uptrend, and possibly then next target for Adani Wilmar would be around 850, 890 on the higher side. Looking at the near-term setup, we advise if it's a short-term bet, if you are buying for short-term trading perspective, then keep a stop loss of 630, which is very important support area for near-term, short-term setup. But overall, we feel that stock may give breakout on the higher side. So our advice would be to buy in the dips, keep stop loss of 630, and breakout above 740 will give a opportunity to scale up the stock towards 860, 890 zone.
Well, we're running out of time, but I just want to squeeze in one last query for today. This one is coming in from Sanjay Chaudhary, and he wants your views on Rajesh Exports.
So looking at the setup for Rajesh Export, we feel that the stock has shown strong momentum since last couple of weeks, and looking at the setup, we feel that this momentum is likely to continue further higher towards 840, 860 zone. So hold your position, keep now trailing stop loss at around 720, and our target is 840, 860 in the near term.
Right, Rajesh, this wraps up our query segment, but before I let you go, do leave us with some stock recommendations for the viewers.
So we are bullish on automobile space, and from automobile, we feel that Eicher Motor can continue furthermore upside from the current level. Looking at the overall setup, stock is enjoying its almost all-time high trajectory. We feel that Eicher Motor can rally further higher towards 3860 to 3900 in the near term. Keep stop loss of 3680 to hold and buy Eicher Motor at the current juncture. Another stock is from cement space, that is Ultratech Cement. If we look at the near-term setup, now stock managed to give breakout of its previous swing high, which was there in the September. And looking at the breakout, looking at the buying action in last couple of trading session, especially in whole cement space, we feel that Ultratech can further move higher towards 4100. So our target is 4100 for Ultratech Cement. Keep a stop loss of for 7100 is our target for Ultratech Cement, and stop loss is at around 6860. Third stock is Tata Steel. Metal space is showing good traction, and looking at the setup on the Tata Steel, there was a breakout on the near-term consolidation range. We feel that Tata Steel can scale up further higher towards 115, 120 in the near-term to short-term basis. Keep a stop loss of 102 for buying Tata Steel at the current level.
Well, thanks a lot for all your recommendations this morning, and thanks a lot for taking out time to join us and share your thoughts this morning. Well, completely timed out on this edition of Morning Trade, but don't go anywhere because coming up next is Markets with Santo and CJ. Stay tuned.